Most beginners believe you need tens of thousands of dollars sitting in the stock market before you can earn any meaningful passive income. But what if I told you that's not actually true? What if I told you that reaching $100 every single month in dividends is not only possible for beginners, but there's a simple strategy that can get you there step by step even if you're starting with a small amount of money? Because here's the reality. While most people are chasing quick profits, smart investors are quietly building income streams that pay them again and again without selling their stocks. And the craziest part, almost no one explains this properly. They either overcomplicate it with technical jargon or make it seem like you need a huge portfolio to begin. In this video, I'm going to break it down in the simplest way possible, show you the exact math behind earning $100 per month, and walk you through a beginner-friendly portfolio you can actually copy and build over time. By the end, you'll understand not just how dividends work, but how to realistically start generating income even if you're completely new to investing. Now, if you're like most beginners, you've probably heard the term dividends before, but it either sounded confusing or too good to be true. Getting paid just for holding a stock. It almost sounds like a scam. But it's not. Dividends are simply a portion of a company's profits that are paid out to shareholders. In other words, when you own shares in a company, you're not just hoping the price goes up. You can actually get paid regularly just for being an owner. This is exactly how many long-term investors build consistent income over time. But here's where most people get stuck. They don't know how much money they need. They don't understand what dividend yield actually means, and they have no idea how to build a portfolio that can generate real monthly income. That confusion leads to hesitation, and hesitation is why most people never start. So instead of overwhelming you, we're going to simplify everything. First, I'll show you what dividends really are, in the most beginner-friendly way possible. Then, we'll break down the exact numbers so you can clearly see how much you need to invest to reach that $100 per month goal. And finally, I'll give you a realistic portfolio example that balances safety and income, so you're not just guessing or taking unnecessary risks. And here's something important to keep in mind as you watch this. You don't need to have all the money upfront. This is not about being rich. Already it's about building a system that grows over time. Even small, consistent investments can turn into a reliable income stream if you understand how to use dividends the right way. By the end of this video, you'll have a clear roadmap. And more importantly, you'll realize that earning your first $100 in monthly passive income is a lot more achievable than you ever thought. Most people hear the word dividends and immediately think it's something complicated or only for rich investors. But the truth is actually very simple. Dividends are just payments that companies make to their shareholders. That's it. When a company makes profits, it has a few choices. It can reinvest that money back into the business, or it can share a portion of those profits with investors. And when it does that, those payments are called dividends. So, when you own a stock that pays dividends, you're essentially getting paid just for holding that stock. It's like owning a small piece of a business that sends you cash regularly as a reward for being an owner. Now imagine this for a second. You buy shares in a company, and instead of waiting months or years hoping the stock price goes up, you start receiving payments every few months. Some companies pay quarterly, some even monthly. This is why dividend investing is often called passive income investing, because once you set it up properly, the income can keep coming in without you doing anything. But here's where most beginners get confused. They don't understand how these payments are calculated, and that's where something called dividend yield comes in. Dividend yield is one of the most important concepts you need to understand, and luckily, it's very easy. It's simply the percentage of your investment that you earn back each year in the form of dividends. For example, if a stock is priced at $50 and it pays $2 per year in dividends, that's a 4% yield. In simple terms, for every $100 you invest, you earn $4 per year. That's it. No complicated formulas, no confusing terms, just a percentage that tells you how much income your investment generates. But here's a very important thing that most beginners don't realize. A higher dividend yield is not always better. In fact, sometimes a very high yield can be a warning sign. It could mean the company is struggling, and the stock price has dropped, making the yield look artificially high. This is what experienced investors call a dividend trap. So instead of chasing the highest yield, smart investors focus on stability companies that consistently pay dividends and have a strong track record. Another thing to understand is that dividends are not a get-rich-quick strategy. This is about building a steady stream of income over time. Think of it like planting a tree. At first, it's small and doesn't give much fruit, but as it grows, it produces more and more. The same thing happens with dividend investing. In the beginning, your payments might seem small, but as you invest more and reinvest those dividends, your income starts to grow faster and faster. And this is where the real power comes in. Because you're not just earning money from your investments here, earning money on top of the money your investments already made. Now let's talk about the question that everyone really cares about. How do you actually reach $100 per month in dividends? Because understanding dividends is one thing, but turning that into real income is what matters. So let's break it down in the simplest way possible. If your goal is to earn $100 per month, that means you need $1,200 per year in dividend income. That's your target number. Everything else is just figuring out how to get there. Now the key factor that determines how much money you need is your dividend yield. Let's look at a few realistic scenarios. If your portfolio has an average yield of around 3%, which is considered safe and common for stable companies, you would need about $40,000 invested to generate $1,200 per year. Now I know what you might be thinking, that sounds like a lot of money. And yes, if you try to reach it all at once, it can feel overwhelming. But this is where most people make a mistake. They assume they need to start with the full amount, which is not true. Let's look at a different scenario. If you build a portfolio with a slightly higher yield of around 5%, which is still reasonable if you include things like dividend ETFs and some higher yield assets, then you would need about $24,000 to reach the same $1,200 per year. And if your average yield is closer to 7 or 8%, which is possible but comes with more risk, you might only need around $15,000. So as you can see, the amount of money you need can vary depending on your strategy. But here's the real loophole that most people don't talk about. You don't need to have this money upfront. Instead, you can build it over time through consistent investing and reinvesting your dividends. For example, if you invest $300 to $500 per month into dividend-paying stocks, you're not just adding your own money, you're also reinvesting the dividends you earn along the way. And this creates a compounding effect, where your income starts growing faster over time. In the beginning, your dividends might only be a few dollars per month, which can feel insignificant. But as your portfolio grows, those payments increase. Then those payments get reinvested, which leads to even more income. And eventually, you reach a point where your dividends alone are generating a noticeable monthly amount. This is exactly how many investors go from earning nothing to earning hundreds or even thousands of dollars per month in passive income. The key here is consistency. Not timing the market, not picking the perfect stock, but simply investing regularly and letting time do the work. Because the longer you stay invested and reinvest your dividends, the more powerful the compounding becomes. And once you understand this, that $100 per month goal starts to feel a lot more achievable. Now that you understand the numbers, let's make this practical by looking at a simple beginner-friendly portfolio that can actually help you reach this goal. Because knowing the theory is important, but having a clear structure to follow is what really makes the difference. Instead of randomly picking stocks, you want a balanced portfolio that gives you both stability and income. A simple way to do this is by dividing your portfolio into 4 parts. The first part, which should make up about 40% of your portfolio, is dividend ETFs. These are funds that hold dozens or even hundreds of dividend-paying companies, which instantly gives you diversification. This reduces your risk because you're not relying on just one company. Dividend ETFs are often considered the foundation of a beginner portfolio because they provide steady, reliable income with less volatility. The second part, around 30% of your portfolio, can be allocated to blue-chip stocks. These are large, well-established companies with a long history of paying dividends. Think of companies that are leaders in their industry and have been around for decades. These stocks might not have the highest yields, but they offer stability and consistent growth, which is exactly what you want as a beginner. The third part, about 20%, can go into REITs or real estate investment trusts. These are companies that own and manage real estate properties, and by law, they are required to pay out a large portion of their income as dividends. This is why REITs often have higher yields compared to regular stocks. They can significantly boost your overall income, but they can also be more sensitive to economic changes, so it's important not to over-allocate to them. Finally, the last 10% can be allocated to higher yield stocks. These are companies that offer above-average dividend yields, which can help increase your total income. However, this is also where the risk is higher. So keeping this portion small helps you balance reward and risk. When you combine all of these, your portfolio might have an average yield of around 4% to 6%. So if you build your portfolio to around $25,000 to $30,000, you could realistically generate close to $100 per month in dividends. And remember, you don't need to start with that full amount. You build it step by step. One of the smartest strategies you can use in the beginning is to reinvest all of your dividends back into your portfolio. This accelerates your growth because you're constantly increasing the number of shares you own, which leads to higher future payments. Then, once you reach your income goal, you can switch from reinvesting to actually taking the cash as passive income. This is how beginners turn a simple idea into a real income stream. Not by chasing hype or trying to get rich overnight, but by building a structured portfolio, staying consistent, and letting time do the heavy lifting. So here's the truth that most people never realize. Earning $100 per month in dividends is not about luck, and it's definitely not about finding some perfect stock. It's about building a system that works for you even when you're not paying attention. Because, at the end of the day, this isn't just about making an extra $100, it's about changing the way you think about money. Instead of always working for money, you're slowly putting yourself in a position where your money starts working for you. And yes, in the beginning it might feel slow. Your first dividend payment might be just a few cents, maybe a few dollars. It might even feel pointless. But what most people don't understand is that this is exactly how it starts for everyone. Every investor who is earning hundreds or thousands per month today started at zero. The difference is, they didn't quit early. They stayed consistent, they reinvested, and they trusted the process. Now imagine this for a second. You wake up one day, check your account, and you've been paid. Without working, without trading, without doing anything. Then it happens again next month, and again. That's the power of dividends. It's not flashy, it's not instant, but it's real and it builds over time. So if you take anything from this video, let it be this. You don't need to be rich to start, but you do need to start if you ever want to get there. Even small amounts invested consistently can grow into something meaningful. The earlier you begin, the easier it becomes. And if you're serious about building this income stream, the next step is knowing exactly which stocks or ETFs to choose. So in the next video, I'll break down a real dividend portfolio with actual picks that beginners can use to start generating income step by step. If you found this helpful, make sure to like the video and subscribe. Because on this channel, we don't just talk about making money, we focus on building income that lasts. And remember, your first $100 per month might seem small, but it's the first step toward financial freedom.